Hi, I'm Vince Molinari, and welcome to Fintech TV. We're broadcasting from the iconic New York Stock Exchange, and I'd like to welcome Mark Elenowitz, Managing Director of Digital Offering LLC. Full disclosure, Mark is a dear friend for many years, an advocate through the Jobs Act. I am so excited about this conversation as we're looking up at the board there with Newsmax just going through the roof. Start off, congratulations.
Thank you.
It's so good to be together here at the New York Stock Exchange.
Yeah, this is truly a historic moment. I mean, Newsmax trading at $43 a share. We just raised $300 million for them through a combination of a Reg D and a Reg A. And this is a first ever historic moment. It is the first Reg A onto the National Securities Exchange and the first one ever onto the New York Stock Exchange, main board.
Well, at so many levels, Mark, who would have thought, a dozen years or so ago when we were advocating for the Jobs Act and on the trips back and forth to Washington, D.C., here you are leading the first ever on this mechanism. And gosh, what is it, up 3 or 4x from the pricing today? So really, let me ask you, I don't want to load the question. What's your takeaway from that?
Well, what we're finally seeing is that Main Street is getting the same opportunity as Wall Street. It's no longer the Wall Street elite. We're really trying to democratize. And we saw it during COVID when we saw the power of the crowd take down major hedge funds. And we looked at it a different way. Why not let individual investors get the opportunity to invest in companies just like the big boys, but make it so they can come in a reasonable manner. So with what we did with Newsmax, $500 minimum. We had almost 30,000 investors get the opportunity to be a part of that community. So it shows it works.
And big shout out to Chris Reddy and the team. Chris, amen, as a fellow entrepreneur and certainly one trailing in the media pathway, super well done. And I think it is that testimony of what we talked about the early days of the Jobs Act, your shareholders, your consumer being the shareholders, and what a testimony of that, of the viewership of Newsmax really getting behind this offer.
Yeah, and that's really what you said. So we've always said that the beauty of Reg A is you turn a customer into a shareholder, shareholder into customer, consumer, hospitality, entertainment, anything with a large social media following, a large fan base. But what we saw with Newsmax, I mean, it was incredible. We've never seen it before. We sold out the IPO in 4 days. Wow. 4 days, $75 million. I don't know anybody on the street in a regular IPO.
No wonder that's doing that.
No, it's certainly not $75 million deals. But that crowd that supports Newsmax and has been so passionate about what they're reporting and the content that they created, they wanted a chance to be a part of the community of not only being a viewer, but also being a shareholder, part of the Newsmax family. And that's why we saw so many investors come in.
Talk to me a little bit about a bit of the journey. So you all did the first IPO of a Reg A equivalent onto NYSE American.
We did.
Now, today, first to go on main board. Talk to me about the structure, because I find it so fascinating when we look at the comparison to a traditional S1, and I think you're looking at the Form 1A. That's kind of the equivalent. Talk to me a little bit about it.
So what we look at it a little differently. What we do is we take all the aspects of an S1. An S1 is an offering statement that's filed with the SEC. It has all the disclosure. It tells you the good, the bad, the risk factors, everything so investors can make informed decisions. When Reg A was originally designed, it was a non-traded asset class. It was designed where entrepreneurs could go in with more of a lighter reporting in order to be able to raise capital from the crowd. And we looked at it and said, wait a minute, this is a great way to bring back IPOs to Main Street and to really Wall Street, because we saw over the last few years there hasn't been a lot of IPOs and they were small in nature. But if we could take the disclosure standard of an S1 and utilize the Reg A methodology, and what is so unique about it is in an S1 you have a quiet period. With Reg A, you don't. So we have the same disclosure, we have the same review process with the SEC. Everything is identical, but it allows us to use general solicitation to go on air like we would be doing now. We could actually do this ahead of time, and it allows investors then in a real-time world, because nowadays everybody's using their cell phone. How do you go into a quiet period for 90 days and not be able to talk about your company when things are happening by the minute, real time? Reg A allows you to communicate that way, and it allows you to get the crowd to understand.
Yeah, Mike, I didn't fully appreciate, I don't want to say the nuance, but that is a major differentiator.
Well, not only that, so in a regular IPO, you have roadshows, but you can't leave materials behind. You can't have a recorded webinar. What we use Reg A is as if you're doing due diligence. We come down to the facility, we walk around, we show the investors as if they traveled to go and get an experience to be able to see it. We record it where they can go back and take their time, look at it, read the offering circular, read the risk factors, make informed decisions by having content available to them immediately and recorded where they can revisit it at a later date. With an S1, you can't do that.
It's really profound when my mind keeps going through it and say, my gosh, what a disadvantage if you were Newsmax going a traditional IPO as a media company.
Oh, yeah.
How do you go to a quiet period, right? It must be pretty difficult
Yeah,
in itself.
exactly.
But not only eliminating that, but flipping it and the real-time due diligence, the real-time updates, in the ability of not having the quiet period, I think is the ultimate due diligence for the investor.
And not only that, so Reg A is a fixed price deal. So when you do an S1, there's price discovery, you go out, and basically what we find with regular S1s is that we've seen the markets shift from being an issuer-driven deal to investor-driven deals. Nowadays, investors are dictating terms, and those terms are not terms that typically companies want to accept, but they have no choice. So they come with what we call structure, so with units, with warrants, reset warrants, all these things that ultimately allow the institution to make money, but the company doesn't raise enough capital, and then they're subject to downward pressure. It becomes this self-fulfilling prophecy. With Reg A, it's fixed price, so that comes with responsibility. You have to be reasonable in due diligence, reasonable in valuation, where you're pricing it for everybody to do well. It might not be as quite as what the company wants, but at the same time, you have to think about these are your fans. You have to make sure that they're taken care of. And then in the end, you're able then to see a straight common stock deal. The exchanges love it because it's not 310 just barely making it over. You know, in this one we had 30,000. In the private placement for $225 million, we had over 9,000 investors.
Give me that again. $225 million.
So we raised $225 million using the Jobs Act again. There's something called Title II, and Title IV is Reg A+. Title II is 506C. We raised $225 million from 9,000 accredited investors that supported Newsmax, and what we did is we made it a $5,000 investment minimum. So the rich don't get richer. We allowed everyday Americans, you had to be accredited, 200,000 income, $1 million net worth, but it gave you the opportunity to be a part of it. And then what we did is those shares come at a discount to this IPO. There's a restriction because they're not registered. And then we followed on with the Reg A because we're capped at 75 million. So in total it was 300 million from the crowd.
Absolutely amazing. You know, Mark, as we close out, tell me, looks like a pretty strong signal coming from the market, not only for Newsmax, but for, I'd say, is it fair to call it the product or the process that you created?
It's the methodology. I think if you're a company looking at how to go public in today's marketplace, there are now options available. Think about it as a tool belt. So you could go the traditional firm commitment underwriting route. You could go a best efforts. We've heard the terms direct listing. Or what we call ours is this is a crowd-financed IPO. Looks, acts, feels, and almost settles like a traditional IPO. So we marry traditional street syndicate. There was 12 different firms that participated. We allocated like any other IPO to them, but we gave the majority of the allocation to the crowd. We let them get first. So anyone that got cut back was not the crowd, but the flippers, the regular traders on Wall Street. We gave them a taste, but we really made it fair for everyone.
Love it. Mark, as we're closing out, Digital Offering LLC, I assume all the phones still ring, lots of texts, things going on, congratulations.
Thank you.
How do people find out more about the Crowdfinanced IPO?
So we encourage you to go to digitaloffering.com. You can also email us at deals@digitaloffering.com. We would love to look at your deal. We look at everybody with a clean slate. We will tell you very quickly if it's something that we think we can do for you. And when we get involved, we really become close friends. I mean, with Newsmax, we were with them for a year and a half. And we try to stay with these clients not only through the beginning, but through the period. And then we help you navigate once you're on the Wall Street. Because it's entrepreneurs know their business, but the Wall Street, as we all know, it's full of a lot of interesting turns.
Absolutely. Well, congratulations again.
Thank you
for joining us.
Appreciate you having me.
Absolutely.
Thank you.